Hi everyone. In this video, we'll just be talking about the three main factors in the Forex market that you'll have to look at. Just be aware of things that you will need to know if you're looking at being a consistently profitable trader. Once again, this is brought to you by WhamFX, looking at buying, selling, and exchanging currencies. And hopefully they help you do that. So, most important things to know in Forex is you have to know how to do your technical analysis. What that means is you have to know how to spot your support and resistance zones, your moving averages, know how to set them, know how to read them, know how to analyze them, know what they mean. Candlesticks. Most people prefer bar charts, others prefer lines. I personally trade with candlesticks just because they give me so much detail in one candle, and it also tells you the movement and the volumes of the bars as they're moving, or of the candles as they're moving. Elliott waves, people use Elliott waves as well. I haven't used them. Bollinger Bands also very useful. It helps you see highs and lows as well as the moving averages. And there are many other indicators. Those are just the most common ones that I have used. I haven't used the Elliott wave though. I do use and have used everything else. And we can speak about all of these in other sessions and other videos to come, and I can explain them, how to use them, how to read them. I'll jump into my slide or my platform just now and help you see how I analyze using these technical analysis tools. The other thing people need to have a look at is the fundamentals. So fundamentals are actually going to be what moves the price, what dictates whether the price is going up, going down. And the technical analysis, what that does is that it helps tie into the fundamentals because it'll tell you when is the right time to enter. So it's very, very important to actually put these two together, the technicals and the fundamentals, because it will help you make more accurate decisions about whether a price is going up or down. So what the fundamentals are, those are interest rates, central bank policies. Are they thinking of raising interest rates? Are they thinking of decreasing interest rates? Are they looking at doing easing? Do they find the currency is a bit too strong or too weak? Do they want to make it stronger? Do they want to make it weaker? Because any one of those turns will actually determine where the price goes. If a bank wants to make, or central bank wants to make, for example, the euro, if they want to make the euro stronger and they decide to raise interest rates, you will see the price just skyrocket over days, months, going higher. Well, not skyrocket immediately, but you'll see an immediate impact on it. So, political figures and events. Brilliant example here is the Brexit that's happening at the moment. Um, Totally a political figure like Boris Johnson said he thought it would be a good thing for the GBP or Great Britain to leave the Eurozone. And we've seen for the last 3 weeks almost the GBP weaken. That's mostly because the market is just looking towards the future where the pound gets weaker because they're out of the Eurozone and they'll be on their own again. Employment reports also increase or decrease a value of a currency. So if a country's employment numbers are higher than what has been forecast in the news, that means that there are more people who are working, which means there's more money flowing into the economy, which means that the currency is getting stronger. Now, if there's lesser people who are employed, that means there's less money flowing into the economy. The economy is less stable, and the value of the currency would weaken. Same thing goes for unemployment claims. More unemployed people means a weaker currency. Less unemployed people means a stronger currency because people have money to spend. And the GDP of a country as well. So with the forecasts and the actual numbers, if it's good GDP numbers, the value of the currency will get stronger or weaker depending on the number. So those are the fundamental analysis of that need to be taken, that you have to just have a look at and just know what's going on fundamentally. What normally happens is that people use one or the other, and I just find that having an eye on both, just or technical analysis and fundamentals, just helps you become a more confident and consistent trader because you're not having any news reports making a trade turn against you, or you're not on the wrong side of the trade. The other thing that we're going to be speaking about now is market sentiment. So now, market sentiment is basically determining whether we're in a bull or bear market. Now, what that means is that the bull market means the market is going in an upward direction, and the bear market means that the market is going in a downward direction. So if people say this is a bullish market, it means that the currency is going up. If they say it's a bearish market, it means the market's going down. The one I haven't added here is lamish, which people don't use common very often. But it just means that the market is going sideways. It isn't going in any upward or downward direction. It's just going sideways. And what you don't want to be doing in a bull market, you don't want to be entering a sell position because you're on the wrong side of the market. So you actually do want to trade with the trend, but just make sure that when you do enter, you basically, if you're going to buy it when it's coming back up because the market doesn't just go in one direction. You'll see some consolidation, and I'll just jump into my platform now and show you now. And even if you're going into a bear market, avoid going long or buying, adding any buy positions if you're in a bear market. And I'll show you how we can determine those now.